So, a quick video on bank reconciliations. It's not as bad as a technique as sometimes people think it is, and sometimes it's massively overcomplicated. And so, just quick steps. And so, when we start a bank reconciliation, we've got to find where they both agree. You've got to start where they agree. You're never going to reconcile. So you've got to find where the opening balance in the cash book appears on the bank statement. So sometimes that can be a couple of days down. And what we're going to be very careful with is not to include transactions that have been included to get to that bank statement balance. So often there's a check that after the deduction of that check or a payment or addition will mean that the two balances agree. Ignore that transaction for the reconciliation purposes because that will have been included prior to the cash book being completed. So therefore, it's not a missing item that doesn't agree on both. It's just the transaction that gets the opening balances to agree. Once you've checked and seen where the balances agree, so you can start at the same point, then you can do your reconciling. So the clear thing then is just look at them, highlight, tick off, whichever way, but do it clean and clear so you can highlight what's missing from the cash book. So therefore on the cash book, but not in the bank statement, what's missing from the bank statement that is not in the cash book. Now then what we do is look for updating the cash book. So that's the next step. And in a question, often that's A. So A, update the cash book for items that are missing. So the items that could be missing could be anything. I've listed them here. It could be bank charges, a back payment, interest. It could be a dishonored check, could be a stale check, or even a cash book error. So we update the cash book to allow for these transactions. Label them correctly. So if it's a rent direct debit, make sure you say rent. If it's a backs payment, it just says backs. It says the name of someone. Put the name of someone. Label them properly. Obviously, it's a mirror. So anything on the credit of the bank statement will go on the debit of the cash book and vice versa. Label them, date them properly. What could also be included is a cash book error. So you might have included a figure wrong. Often it's a transposed number. If that's the case, you've got to have an entry for the error. So if, for instance, the debit side was £100 too high, you would have to do a credit entry for £100 to compensate for that. But you put the label of whatever the name of the T account and then error in there just shows that you know you're correcting an error. I always think is a good plan as well. So the cash book updated, get a new cash book balance brought down. Sometimes the opening balance. Actually, this is a good point. I've not referenced this. When you're updating the cash book, start from the closing balance on the one you're given in the question. Often students try and recreate the whole thing. So note, you can start from the closing balance brought down and subtract any transactions, debit and credit, to work out the new balance brought down. And then when you've got that balance brought down, you're going to use that in the reconciliation. It says here, if it's on the credit side, it's negative. You should know that it's an overdraft. So credit bank statement, sorry, not bank statement, credit bank figure in the cash book is an overdraft. So you start balance as per cash book with the figure in brackets. The layouts at the bottom, so we add unpresented checks. An unpresented check is a payment that we have made, a check that we have sent out that hasn't gone through the bank yet. So our bank statement figure is higher because they don't know that money's coming out. So we add those unpresented checks. We will then deduct any outstanding lodgement. So an outstanding lodgement is money we paid into our bank, but it hasn't cleared yet. So we think we've got more money than the bank statement does because we know that money is going in. The bank doesn't know until it hits it. So we have to deduct it to reflect that. Then we can have a bank error, and they should tell you that in the notes to the question if there is. You don't put the bank error in your cash book if you've had additional money put in your account or taken out. That shouldn't be there. We're not going to include it. We just put in the adjustments here in our reconciliation, add or deduct the bank error. Then that will agree to your balance as per the bank statement. Remembering that bank statement debit balance would be in brackets because it's an overdraft, credit will be positive. When they agree, they're amazing and it's lovely. But when they don't, you're still going to get plenty of method marks if you follow each of the steps. So don't be daunted by a bank rec, just make sure you can do all of those. And make sure you know the benefits, you can identify fraud, you can identify timing differences, you find out about dishonored checks, you can update the cash book for any errors. However, it doesn't show everything and it takes some time to do, but just clearly make sure you understand the appreciation of the bank rec and why it's a useful tool. Okay, good luck.